Hey, it's Ed here. Today we're taking a look at technical analysis for SP500. I'll cover wave analysis with Elliott Wave Theory and provide multiple scenarios the price may take and explain why I prefer one count over another. Let's take a look at the different possibilities. Starting here on 15-minute time frame, and today we're going to be focusing on this structure over here. So on previous videos we went through the possibilities in which we had this as either ABC, having this as a 5-way structure on this count, ending something, and that would be ending this structure over here. The other scenario was that this was the start of something and we ended a structure down here, and this was indeed a 5-way structure looking for or basically being a start of a larger move, whether it's an ABC or a 1, 2, 3, 4, 5 upwards. We don't know of that yet. Now at the moment, if we are looking at this count first, again originally by Dan Dowd Trading, if you want to check him out, be my guest. He's a good Elliottician as well. The invalidation for this one is at these lows. Again, I don't know what kind of structure Dan has for these ones. Again, it was basically, I think the idea was that we had a WXY coming down, and I'm not quite sure how he has this, but in any case, I named this count after him just based on the higher time frame structures. But let's go through this fast here. So again, this was a 5-way structure, 1, 2, 3, 4, 5 into a possible wave 1, and we were looking for a possible wave 2 coming down. Now we had some targets over here where we were talking about the naked point of control and the golden pocket right around that, and we did hit the naked point of control here, and right off of it we got a bounce. So yeah, it didn't hold, but we did respect that area. So definitely should be using that naked point of control more often, as well as some kind of confluence more. Now the structure here, how I've labeled this, is actually a diagonal into an A wave, then a 3-way structure into B, and then again 5-way structure coming down. I've labeled this as a ABC into 1, ABC into 2, ABC into 3, WXY into 4, and then another 3 ABC into wave 5. So I had Cohen on Discord mentioning I think he had a bit different counts, but why I'm using this over anything else is just because look, if we are looking at this whole thing like a 3-way structure or combination of 3-way structures, sorry, for this diagonal, this looks very, very proportionate. Each these waves are smaller than the next one, as it should be on the price and in time as well. Time is definitely an important factor here, and that way we can determine what is the most likely outcome. Again, here we could be having this as another. I think Cohen had his structure starting from here. I disagree about that a bit, but I think he had this as a 1, 2 and 1, 2. 3, 4, 5. So he had a 1, 2, 1, 2 set up here, and he did have a diagonal here as well. It fits, but again, to me, I feel like just based on these reasons that again, basically the time aspect of it and the size aspect, this is much smaller than this one here. So that's why I do prefer my count here a bit better. Of course, the other count or count is not invalid, so you could be checking into that as well. Now, at this very moment, this is still has the possibility of being an ABC. When we are getting to the 1.618 around the 36.30, then we definitely need to be more bearish. Even at the moment, we have gone through the golden pocket here, which had this volume spike. Now we are basically at the no man lands, and definitely feels like we might be dumping a bit too much or more downwards to confirm that we could be having this instead of an ABC, we would be having something else. Now let's take a look at that something else case. Now zooming out a bit, and this was the other scenario in which we had this as a wave 4 coming down or going up, sorry, correcting the previous structure, and then we would be looking for this again as a 5-way structure, as a diagonal, exactly same way as we had on the previous one, and then we had a wave 2, and then looking for downwards. Again, 1.618 would be expected for a wave 3 at least. Now we can confirm one count, or this count, to be the new main after we have taken out these lows. Again, I don't really have too much bias at the moment. I'm still in my shorts from here, so don't really care about this. There is definitely possibilities here on shorter and lower time frames how this could be playing out, and we could be even looking into those. On 1 minute we can see that for this last possible leg for that C wave, we could be in some kind of a diagonal structure here. It is definitely very how do we put this, very dump-like. We do have some kind of bullish divergences starting to form in here, and we are getting again another low here on price against the RSI lows. Now if we are going to be taking these lows out here on RSI and in price again, then we are negating this this divergence at the lows, and most likely again we're not done. This definitely can be some kind of diagonal. I'm not quite sure how I would be labeling this. This somewhat feels like a three-way structure possibly. This could be a, I don't know, this dump must be so fast again to happen that can't really get a good looking structure into it anyway. Let's see. Yeah, I don't like that. Maybe we do have this as three ways and then three ways and then another three-way structure like that. Maybe that's a WXY coming down into 1, 2, 3, 4, 5, possibly, and soon ending. But again, I would be looking into this structure over here and a bit on higher time frame, looking at if these divergences hold, and then we can be starting to move up from these lows before taking out the 1.618. At that point we can be starting to get into more bias of this count here. But I feel like that is pretty much enough on S&P 500. If you made it this far into the video, I would appreciate the likes. Link to my free Discord server in the description below, and for now I thank you for watching and hope you have an amazing rest of your day. See you next video, bye bye.